Daan Struyven of Goldman Sachs writing global visible oil inventories are likely to reach record low levels, even in an optimistic scenario where flows start to recover by the end of April. Daan joins us now for more. Daan, good morning.
Good morning. Thanks for having me.
You can see how things are set up. You've got visibility of the tankers that have arrived and the ones that aren't coming anymore. Can you describe what the next 2 months is going to look like?
Yes, so global visible oil inventories, I would say fortunately for the world, were at pretty high levels before the war started. But the pace of global inventory drawdowns is just so sharp, around 11 million barrels per day or so, that because of the bottlenecks and the logistic supply chain time it will take for the system to reset, that even if we start recovering flows by the end of April, we're on track to reach the lowest level for global visible oil inventories. Even if flows start to recover by the end of the month. And we honestly just have never seen how oil prices react at such low levels. So we have to recognize that that implies some upside risks to our forecasts, which are based on historical data.
Does that aggressive drawdown in inventories explain why something like, say, dated Brent is some $40 off the highs?
Yes, so the dated Brent is still $10–15 higher than the June futures contract. The main reason is there's a big premium on getting oil sooner rather than later. The June Brent futures contract gives you the right to get oil in June. Dated Brent gives you the right to get a cargo in the next 10 to 30 days. And because some market participants assume a high probability that by June things will have normalized, you have this big immediacy premium on barrels now rather than later.